Hold up. We just got approved. Trading will start in 4 weeks.
Let's go. Wow. That is phenomenal. We did it, boys.
Oh,
BlackRock gets... No, I got fucking memed. That's just someone chilling their meme coin. Well, I guess it happens.
Hilarious. Yeah.
Strike it. We'll fix that in post production.
All right.
No, we're keeping that.
No, we're not. We're going to keep that.
We're absolutely keeping that.
Hey everyone, this episode is brought to you by Sei, the blazing fast parallelized blockchain which is unlocking Solana-like performance for the vast ocean of ETH devs out there. Now, you're going to be hearing all about Sei and their new V2 upgrade, but if you take away one thing, the EVM is here to stay. There are some problems with it, which we're going to get into later in the episode, but Sei, and especially their V2 upgrade, is helping solve that. So thank you very much, Sei, for making this episode possible. Hey everyone, wanted to give a quick shout out to this episode's sponsor, Flood Protocol, the optimal DEX aggregator. Now, if you are a listener of Bell Curve, you know that MEV is a massive problem, which is why we are so pumped to partner up with Flood on this season. Flood is the only gasless and MEV-free aggregator that not only gets you the best execution, but also gives you back all the extra surplus that you create every single time you swap. Now, this is relevant for both swappers and developers, but you're going to be hearing all about them later in the program. So for now, thank you, Flood, and back to the show.
All right, everyone. Welcome back to another episode of Bell Curve. Before we jump in, quick disclaimer. The views expressed by my co-host today are their personal views, and they do not represent the views of any organization with which the co-hosts are associated with. Nothing in the episode is construed or relied upon as financial, technical, tax, legal, or other advice. You know the deal. Now, let's jump into the episode.
Welcome back to another Roundup edition of Bell Curve. You got Michael 1-2 Vance, and a pretty shaky intro today. What's going on, guys? I don't know when that was.
You all right there, Mike?
Yeah, I don't know.
Yeah. Just too much caffeine this morning?
Dialed in, baby. Dialed in.
Tap in.
Fellas, big week. One of the more bullish weeks in crypto that I can remember. We've got, obviously, the big story this week is the ETH ETF. The odds moving from 25 to 75%. I mean, there's a bunch of details that we could go through on this, but I can just, I guess, kick it off. And I think this was originally tweeted from James Seifert, who is one of the Bloomberg boys who, with him and Eric Balkunas, are, I guess, the unofficial spokespeople for the entire ETF industry at this point. But he tweeted out that they were revising their odds from 25% of an ETH ETF getting approved this month to 75%. And this was from chatter that they're very connected to all of the ETF issuers. And what made them change the odds was that the SEC was very quickly starting to get back with comments about these forms that need to get filled out. The 19, what is it? The 19B4s. B4s, yeah. This is where I'm going to LARP as a legal person. None of this is my expertise. From my understanding, there are two different sets of forms that need to get approved. There are these 19B4s and there are S1s. They come from two separate divisions of the SEC. But historically, whenever issuers have been filed with the SEC, when Bitcoin wasn't moving, they just, no comments, just stonewall denied, and very little response. But there was a flurry of responses out to basically all of these different issuers, some of them that didn't even have, from my understanding, live applications. And it was all around the due date for the Van Eck filing, which is actually today, Thursday that we're recording. And so now it seems like there's been a little bit of an about face. And the question that people are asking is this political? Did this come from the top? Because the Democrats really crossed the lines and on the SAB 121 vote that happened earlier this week. So what do you guys think about all this?
So the two components here are the 19B4s are effectively an exchange rule change. And what that would enable, the approval of that would enable the trading of assets that would include commodity spot futures ETFs. And they would include Ethereum in that list. Bitcoin was already included in that list, which is why we have the Bitcoin ETFs. And then the S1s are from the actual issuers themselves. And that is it's the formal document or application to list a new asset. And so when we think about sort of what's the plan of attack here, where are we going, what will likely happen today, and this will signal, effectively an approval, is that the 19B4s will be approved. And what we started to see as soon as the chatter from James and Eric became more than just chatter, the 19B4s are going to get approved, but we haven't even started on comments on the S1s. And that's one of the reasons why I think they had this at 25% going into the end of last week, is there were tons and tons of, rounds of comments and, engagement, and things were happening kind of all across the board for all the different issuers leading up to the Bitcoin spot ETF approval. And in this case, there was nothing. It was silence. And so the things that can get approved quickly here are the 19B4s, which effectively clears the path for S1s to be engaged with, commented on, and then approved. And so we've just started that process. In 2021, when we had the Bitcoin futures ETFs, the timeline was actually about 5 months for there to be a 19B4 approval and then an actual launch of the futures ETFs. We would expect that it's not going to be something that can happen immediately, the launch of these. So we're expecting that there will be an approval today, which effectively clears the path for there to be an Ethereum spot ETF. And then there's going to be engagement. And there already has been some engagement and comments on the S1 documents themselves from the actual issuers. I saw at least Bitwise and Fidelity had their first and second rounds of comments on the S1 documents, but expect that will probably take weeks. And, this isn't going to be very different, I think, from Bitcoin at all. This is going to be the same process of all the things that they need to do. It's just that they're sort of behind in terms of getting these comments done. So, the launch timeline here is probably in the weeks and potentially, a month or two away. But there's going to be some lag in terms of when we get the approval today and when these things can actually launch.
Probably months, to Michael's point. But also, I feel like I've taken a lot of victory laps this week, so maybe another one isn't quite necessary. But I think the case for these being approved was never like we believed that it was going to be 100%, signed, sealed, and delivered, and that there was going to be this, pivot at the last second. Our case was always that it was more like 50-50 than it was, 20% chance. And I think this is also a case study in never using a lack of evidence to prove a point. Like, by that logic, you can prove anything. There's no evidence that Bitcoin wasn't invented by aliens, and so maybe it actually was. It's like that's just like a bad logic trap to fall into. And now we're going to have the same series of events as the Bitcoin ETF approval, to Michael's point, but like playing it forward. Soon we'll get there's going to be no demand FUD. That will happen. Then we will have the ETH outflows FUD. That will also happen. And so you're just going to see this thing climb this wall of worry until it launches. And the Bloomberg guys, I just feel bad for them. I feel like they're trapped now, but they're putting the inflows at 10% of Bitcoin, which is great. I like that bar. It's pretty low. But why do people buy assets? Because they outperform. And if you see consistent ETH outperformance on the way to this ETF, there's going to be natural demand for it. And so again, my understanding of the current crypto markets today is that a lot of them are driven by ETF flows. The ceiling for any given alt is kind of driven by the ceiling for what Bitcoin could hit and the inflows that are associated with that. And so it never really made sense to fade the only other asset that would have ETF flows. And we've seen a lot of shorts get covered. We've seen a lot of shorts get liquidated. And people are basically trying to unwind 8 months of anti-ETH positioning in a few days' time. And it's only just starting, is my sense.
Mm-hmm. So, yeah, go, Michael.
Yep.
I completely agree with that, and I think one of our analysts, Westy, tweeted this out, but this is my general sense as well, is there's maybe an analogy to be made here with do you remember the Cointelegraph intern tweeting out the Bitcoin ETF? That was incorrect news, but it sort of reminded the entire market that they were off sides, and it was like, oh yeah, this ETF is coming, and it's not actually that far away. And it was, after you saw that fake tweet, there's kind of this slow, steady grind up in the price of Bitcoin. I don't know if that's going to be the same thing with ETH, but it's just going to remind everyone that, okay, maybe it's not tomorrow, but the ETF is coming soon. Everyone saw what happened with the Bitcoin ETF, and there's not really much to suggest that this would be any different. So, yeah.
But what you're talking about, Mike, is people that are trading this or swing trading this. I think, what the general perspective is that there's just going to be a market structure change, and that there's going to be inflows into an asset where 30% of the asset is staked. Much of it is being used as collateral. Like it has fundamental characteristics that are just different from Bitcoin. And I think that, will also play a part here. And that is just going to be something that people realize over time, but it's the market, it's the flows difference that I think will drive the narrative. And then that narrative will drive back onto that narrative.
Mm.
There is also this path where it's like, let's just say ETH outperforms BTC, and then maybe ETH doesn't get 10% of flows, maybe it gets 50%. And ETH is a lot smaller of an asset, and it's much more composable, and that means that the wealth effects from like $1 of ETH price movement to the activity that happens on DeFi or NFTs or all these L2s, like it is reflexive in that sense. And so I do think there is this path for ETH outperformance, and we'll see. It has to be the price outperformance drives the flow, drives the narrative, drives Larry Fink on TV. Like there was this great tweet from some guy, I forget who it was. Like he has like 500 followers, but he was like, people are asking me like how they're going to drive demand for the ETH ETF. It's like, brother, Larry Fink is going to go on national television and tell people these tokenizing assets and putting them on ETH. Like it really is that simple. And I think one other thing I've noticed over the past, call it year, like this is like the first time that I've ever invested in like stocks outside of crypto. It's actually hard to find a stock that goes up, significantly in a year. And like, I think for a lot of boomers, like Bitcoin is like, oh, like this thing, I forget how much it's up this year, probably like 60 or 70% or something like that. But that is an outlier in their portfolio. And you can bet that they're going to be looking for more of that. And, if people are just starting to allocate to Bitcoin and all those paths are being paved and all the access to the RAs and wirehouses and, big banks of the world, that's just work that's been done for ETH. And so like, just like you're seeing this kind of like third wave of ETF inflows for the Bitcoin ETFs, I think you can kind of see just ETH riding on that type of coattail. So yeah, other thing is like, we're not people who don't want other spot coins to have spot ETFs. I think it's going to be a while for that to happen. But, I think the Bitcoin maxi coping over this ETH ETF getting approved is not something that the ETH community should pay forward to any other coin. We should generally be rooting for each coin to have their own thing.
So I'm looking for this meme. I'm not going to get it in time. I actually did. So I'll let you guys take the high road. I did see a couple takes that I just like I had to include here, and Yano tweeted both of them. So I'm trying to pull his Twitter up, but yeah, there's a guy named Matt Stoller, who this is an exchange that happened this morning. And look, I'm sure Matt's actually like a good dude, and for whatever reason, this sort of just worm has gotten in his brain about crypto. But he tweeted the passing of the FIT 21, the market structure bill through the House, which I'm sure we should talk about in this podcast as well. But Jake Chervinsky was talking about the number of Democrats that crossed the line to vote for this, and it was 71, which was way above what everyone thought. And he just tweeted, straightforward vote for scamming and corruption. And Jake goes, take the night off, Matt. And Matt just doubles down and goes, you're a traitor to America. You're a traitor to America. Like,
easy, Matt, easy.
Oh,
easy.
there, buddy. Oh, there. Like, hey, there.
Like Kirsty Noem, like doubling down on shooting her dog. Just like take a week off, come back when you're ready. I mean, have you tried not thinking about it?
Those are like old school fighting words. That's like, in the 1700s, that gets you shot. Like that is that's a lot.
Take 2 Xanax and call me in the morning. See if you feel better.
I
mean, it it is a momentous week of crypto political regulatory history. Probably 2 weeks now, but it started with the Trump being pro NFT thing, and we bought some of those NFTs. We're part of that, I guess, movement. And then it kind of dovetailed with the SAB vote into the more mass defection type movement on Fit 121, which we should definitely talk about. But I don't know. It kind of, I think the big takeaway is that like we all have agency here, and that people are reading crypto Twitter and they're looking at how many signups that something like a Stand with Crypto gets, and they're listening to the people calling their Congress people, and like it is possible to get good regulation for this industry, but it is up to all of us. And it's just incredible what just happened. And now it's like we're kind of the dog that caught the bus, and now it's like figuring out what we want to do with that bus. Like, do we want to have Fit 121? Do we want to have it as is? Do we want to have it differently? I think there's very little chance that it actually passes this year, but we all need to be supportive of the people who put it in a position that it could potentially do so. But the more constructive arguments and discussions are probably like, what does good regulation look like long term? And Fit 121 is a pretty good place to start, but there's pretty glaring holes in it so far from what we've seen.
I agree. We were reporting this podcast last week as we were literally checking the Senate votes for SAB 121, and I think about how to like best summarize this week, and I'm sure others will probably say the same, but it's exactly the Lenin quote of some decades nothing happens, and then some weeks decades happen. Mm-hmm. Like everything has changed now, and we have crossed the Rubicon into this world where, and I think we started to see that some of the tea leaves with things like the poll that Paradigm put out, where 30% of people aged 18 to 45 own crypto, but 5% of people over the age of 65 own crypto. And I think that fact alone signals that this is going to be, a younger person perspective. It's going to be a younger person vote. A lot of those people are actually now voting in as well and participating in the electoral process, calling their congresspeople, calling their senators, signaling to the rest of the world that this is a subject that they actually care about. And that, I think, is starting to make ripples on Capitol Hill, and people are recognizing it. They're breaking ranks with some of the pedagogy of whatever, whoever was the one controlling this stuff. And that, I think, is a huge shift in perspective. So to Vance's point, we now have a bit of the momentum, and we have to decide which direction we want to send it. Fit 121 is a fantastic start. It's definitely not the end. And, some of the things like SAB 121, the stablecoin bill, which is still being, discussed and potentially changed or altered, like those types of things are going to be the things that will happen. And I think what's becoming more clear, it's just like the ETF process. It's not really a question of if things are going to change from a legal perspective, from a regulatory perspective. It's a question of when. And that, I think, solidifies the United States as putting itself out there as wanting to be where we haven't been playing historically, as a crucible of innovation for this crypto industry, which has been moving overseas. And so I'm fundamentally happy. I think this is one of the biggest weeks in crypto that I can remember for many reasons, but it's been amazing to see.
Ryan Selkis is the GOAT too. He's,
dude.
I mean,
oh my
not
God.
only is he like a fun guy to have like beers with, but like he has that fighting spirit that allows him to get up and go do pretty cool things. So shout out Ryan Selkis. He's the GOAT.
I gotta be honest, I am just super, I don't know what the word is, like pleasantly surprised, but more strong than that. I guess I'm a little bit sensitive every once in a while to when there's a lot of things that we in our little insular bubble of crypto say like, oh, crypto is going to be an election issue. And in my heart of hearts, I was like, I really want that to be the case, but I didn't really believe that it was. And this week, I mean, clearly that actually is, I mean, crypto has actually graduated to DC. All the good and the bad that comes along with that. But I think it's just a symbol of us moving up in the world. And this was just a pure political miscalculation from, I think, the Democrats here. And it never really made sense. I don't think there was a lot of great strategy behind it to begin with. Just being anti something doesn't really make sense to me. But I think they really woke up and realized that, wow, a lot more people own crypto than we thought. At the very least, let's not be super anti this. And yeah, I just felt like it was a massive step forward. And as someone who deeply cares about crypto and lives in the US, like, that's huge. So
there's tens of millions of us in the US. There's hundreds of millions of us globally. The industry is worth multiple trillions. Like, this isn't like we're like selling Girl Scout cookies, you know? Like, come on.
No shade to the Girl Scouts. Those
no shade.
No
Yeah, great cookies.
I think they got canceled last. I mean, I don't even know what happened to Girl Scouts.
No,
but anyways,
that was Boy Scouts.
that was Boy Scouts.
Oh, yeah. What are they doing?
But like, look, like, I think the offer to politicians is like, you know, friendship. Like, we can build this thing together. We can get it regulated. We can clean up our shit. We can, you know, build technology that helps a lot of people. And then the offer for being anti it is like, you're going to get primaried. And the industry is willing to spend a lot of money to change your mind. So I'm surprised it took this long in some ways, but it just felt like it was this like boiling kettle that just the top burst off eventually. And I don't think I've ever seen any sort of industry regulatory pivot like this in this short of a time span. Like, AI didn't get this, renewable energy didn't get this, even Web 2, the internet didn't get this. I think this is also an internal alarm bell of like, the current Democratic coalition is not coherent enough to win the election. And so they need to start adding some people to the coalition that can help it on the voter side, on the raising money side, on the just like the organic grassroots interest side, because like having that visual of all of those people with like the Trump suit, like the blue suit, the red tie at Mar-a-Lago, you know, they're all young, they're pretty successful. It's like, those are not the people that you want to be isolating. Not right now if you're the Democratic Party. I hope that the Democratic Party can clean their act up, but it's been 4 years of basically crypto being illegal, along with a lot of other things. And I think not just our industry feels that way.
So, you know, something that's kind of cool, I forget if I talked to you guys about this, but permissionless this year is in October. It's right before the election, and it actually lines up with the final in-person debate of Trump versus Biden. Not like, oh, it's the same time, in the same city.
No, they're not doing that debate.
What?
No, because that's the Democratic, that's the debate commission's debate. They're doing the two special ones that they planned separately, sadly.
Oh, damn. That's too bad. Man, that would have been electric. I would have loved to see that in person. I mean,
they still may end up doing it.
Yeah.
I mean, the first one is in a month. But like, we've said this before, but like, very rarely do people think in long-term increments. But like, they can think in like presidential 4-year cycles. And it feels like a lot of the country is kind of like thinking about what they really want, what they value, which is great.
I agree. Okay, question for you guys. What do you think some of the second derivative impacts of this ETH ETF approval is going to be? And I'm not just talking about which is the next ETF, right? Like, everyone's kind of already asked.
Let's put that to bed. We've talked about it before, but
right.
you need 32 months of a designated futures market for an asset to be considered, apparently by the SEC, to be something that would have a spot market as well. Nothing else has had commodity status with the CFTC other than Bitcoin and ETH.
Right.
I would say late 26, early 27, maybe mid 27 is I think like I honestly do think they're going to approve the stupid ones first, like the Litecoins and the Bitcoin Cashes. Like, I think Solana and I guess, yeah, just Solana is probably the one that deserves it the most, but there's just so much that has to happen. It's going to take
the first thing that will have to happen for Solana is there will have to be a conclusion or a culmination to the Coinbase lawsuit where they're named as a security by the SEC.
Yeah.
There's not going to be the possibility of the CFTC coming out and saying that that's a commodity when there's current ongoing litigation that says otherwise.
Yeah. So maybe like that people are speculating about that all over the place. That's going to be further out than I think everyone's giving it credit for. But here's one thing that I was at a dinner this week. Some people are talking about something that might end up.
Hold up. You just got approved. Trading will start in 4 weeks.
Let's go. Wow. That is phenomenal. We did it, boys.
Oh,
Then I
boy.
thought
That is much better than
Waste
Tree BlackRock. BlackRock gets no, I got fucking memed. That's just someone shilling their meme coin. Well,
That's
I guess it happens.
hilarious. Yeah.
Strike it. We'll fix that in post production.
All right.
No, we're keeping that.
No, we're not. We're gonna keep that.
We're absolutely keeping that.
we'll
Got
keep that in.
him. Got him. All right, we'll keep it.
Hey everyone, wanted to give a big shout out to today's title sponsor, Sei. Now, I want to talk to you guys a little bit about why I think Sei is cool from a design standpoint, a big problem that it solves for ETH devs out there, and then some cool stuff that Sei has coming up. The reason I like Sei from an architecture perspective is, again, it's a very fast blockchain, parallelization, all of that stuff, but Sei has essentially been custom building block space, which is for consumer apps and dexes. Now, they have some very cool features which enable that. So twin turbo consensus, optimistic parallelization, Sei DB, all of this stuff allows you to reduce the time to finality, make for very, very fast transactions. So if you're building a consumer app or a DEX, this is basically the blockchain for you. If you've been building in the EVM, you love the EVM, but there are some restrictions about it that don't support your app. So maybe you can't do fast enough transactions or it's not parallelized, whatever it is, you can now take all that stuff that you built. You don't have to start from scratch and you can build it on Sei. Now, recently they've launched V2, but also public devnet. So the way that you can follow that and keep up to date is go and follow Sei Network on Twitter. All right. Thanks, guys. Hey, everyone. Want to give a quick shout out to this episode's sponsor, Flood Protocol, the optimal DEX aggregator. Now, Flood is the perfect partner for this episode on the multi-chain future because Flood is solving so many of the issues that we're going to be talking about this season. And this is relevant for both traders and devs. So if you are a trader, you should definitely head over to Flood Swap and start trading because they solve 3 massive problems. 1, gasless trading. No more pesky trading fees. 2, you don't have to worry about getting front run. MEV free. And then 3, they have excellent order routing so that you know that you are getting the best price. So head over to Flood Swap and click the link in the bottom of the show notes. We're going to send you right there. For the devs out there, you can leverage Flood's flexible hooks, allowing you to make swapping a first-class primitive by adding custom order types like TWAPs. Or if you're a wallet builder or something like that, you can actually build your own order flow auction in and start recapturing a bunch of that MEV. If you want to reach out to them, go to devs@flood.bid or just jump right in the Discord. All right, guys. Thanks very much. Appreciate you, Flood.
All right, so here's a question that I have for you guys. So this is something that was coming up at a dinner that I was at earlier this week, but people are like, let's say, so staking was a big question about, you know, if that's going to be included or maybe when it's going to be included in an ETF so that ETF holders can get yield from staking. And people were starting to question, well, maybe the SEC or just regulatory bodies in general are going to start to take a deeper look at things like MEV and the staking ecosystem of ETH in general. And we saw a little bit of this last week. We talked about Low Carb Crusader, and he performed this MEV exploit about a year ago. And everyone has kind of, I think, sort of lazily thought, yeah, those guys at the SEC, they couldn't wrap their heads around MEV or they're not interested in that. And they are. And
Turns out they can.
Turns out they can. Yeah, turns out they can grok that stuff, and they are grokking it. And I think if you are gonna think about including something like staking yields in an ETF, then they would have to have a better understanding of where these yields are coming from. And execution layer rewards and MEV are a big part of that. So yeah, we should probably get ready for regulatory bodies to start poking around how things like relays work, the builder market, all of that stuff. I would be
L2s. Yeah, the government isn't dumb, obviously. Like, if you read the MEV suit, like, they know what's going on. The guys also had this, like, Microsoft doc, which was like, step 1, the crime. Step 2, like, the ghetto. It's like, you fucking idiots. Like, what?
Recent Google searches. How long does statute of limitations for wire fraud exist?
Dude.
Is this illegal?
I mean,
come on.
I feel like we've talked about this, but, like, you know, children have problems with object permanence, where if you go behind a wall, they assume you don't exist anymore. That's, like, the same mental model of, like, if I don't get caught for a crime in the first, you know, I guess in MEV, like, 30 seconds of it happening, then it's not a crime. It's like, no, that's a crime.
So
with crime.
Yeah.
Ooh, yeah. I mean, I think there are a lot of things that I think there is going to be some like yang to the yin of like an ETF getting approved, where it's like, are custodial L2s money transmitters? Is MEV, legal or illegal? There's all these there's all these questions that like people assumed it would just be too complex for the government to get into, which they probably should. And I think that actually is helpful in some ways, where it underlines things like, what is a decentralized blockchain?
Yeah.
Like, I'm sorry, but like if your L2 is a single sequencer, like that's not the same thing as a decentralized chain. And so I think digging into that is going to be big for the government, at least.
Just to be clear, we're not putting MEV on trial here with this lawsuit. They exploited people that stole money. Like
Totally.
those people were MEV operated. Like it's still fraud. It's like, what's the line from the SBF case? It's like, if you steal the money and then you give part of it back or all of it back, you still stole the money, so it's still illegal. Like that is what happened. So MEV is not really kind of like on trial here. I just want to make that clear. It's more, what are the definitions of this? Honestly, there are some interesting definitions that come through in the FIT bill, which is like, what is a decentralized network? And, some of the things that happen, and these are in the depths of the current text. We'll see where everything lands when it gets to the Senate and after debates. But for instance, no one can own more than 20% of the tokens or have voting control over 20% of the tokens. There's no one who can make unilateral changes to the code base. There's actually no changes to the code base that didn't go through decentralized governance in the last 3 months. Like these are some of the definitions that are literally just voted on and approved by the House of Representatives yesterday. So like, I think we're starting to get to the point of definitions for a lot of these things. Single sequence, like the single sequencer, depths of MEV, some of the like really nitty gritty blockchain stuff, like we're still a ways away from that. But I think we're starting to put the foot forward in terms of, what these bills actually have in them.
Yeah, and really good point. I didn't mean to say that we're putting MEV on trial with that. It's just more of it's just one data point to say that authorities are starting to look into this whole world, which is heretofore been sort of like, hey, don't look over here. But maybe an optimistic take on this that I was thinking is maybe the government or like the SEC getting more involved in some of these areas, like how decentralized really is an L2. What does the MEV transaction supply chain look like? And can we have this sort of centralized relay in the middle of it? It actually might be a forcing function for decentralizing parts of the network that didn't have a forcing function before. Like, I know, not to
That's the goal.
That's the goal, right? I mean, look, Jito's doing this actively on Solana. Like, they're looking into parts of that MEV supply chain, and they are actively looking for solutions to decentralize that stuff. I know it's going on in Ethereum as well, but this was one of the issues with L2s before, is that there wasn't a strong incentive to decentralize your sequencer set or move off of multisigs or anything like that. But now maybe there is more of an incentive to do that, especially if somewhere down the line, if you ever want an ETF for your token, you're gonna need to have that. So yeah, I think this could actually be a little bit of pain in the beginning, but it could be a forcing function for more decentralized outcomes later down.
I mean, maybe it's good to talk about FIT.
Yeah.
The market structure bill. Like, I think people will be surprised with how prescriptive it is when they really dig in. Like, there is a path to decentralization, and it involves, like, has anybody voted on governance changes that have impacted the protocol, in the past X months? When you are vesting your assets as an investor, like, those are called restricted digital assets, and those have to be like custodied and maybe even like wrapped in a like restricted, no transferability type token. There's bifurcated markets for commodities that are decentralized and securities. There's definitely good and bad with this, but I think the overall view is like, it's going to provide a pathway for crypto to exist in the US. Like, you can raise, I think it's like 50 million in an ICO.
75.
Under this bill. 75 million. Like, you've been asking for ICOs to come back. Good news. Like, we got something for you, but it's like there is a compliance burden that comes with that. That's significant. And so it's going to change a lot of how crypto works.
I think my personal take, other than some of the points that Vance just described, I think one of the best parts of this bill is the disclosure requirements. So people that are affiliated, people that are related, and there's definitions for both. People that are, founders or control people or governance participants or employees who created the protocol and have tokens are related. And there's disclosures about how and when you can sell. There's disclosures around, insider trading protections. So, founders and investors can't, quote unquote, dump on retail anymore through, pseudo-anonymous wallets. Like that doesn't happen in the first place, just to be clear. But, there are now restrictions around that not being able to happen from a legal perspective. Like there are a lot of the things that there's a reason it's called the market structure bill that create structure for these markets that I think will be beneficial to everybody involved and give a path forward. There's, I would say, a few different nits and changes that would ideally get through another round of changes and amendments, but there are massive changes to the ways that these markets will work going forward, and definitions that we've been waiting for years now.
Yeah, I completely agree. Here, one thing that I was thinking about the FIT bill specifically being really prescriptive about what it means to be decentralized and what that path looks like, that feels like you can't uniformly do that for all of crypto, because that looks very different for an L1, right? Like the level of decentralization that's required for an L1 money like commodity thing is super different from a game, that has a gaming token type thing. And I think that if we got super prescriptive, like this will just be one of the challenges of this bill that I guess, but the level of decentralization that something like Bitcoin has doesn't work for if you're trying to create a product or a service, I don't think. So,
right. Yeah. But that's where the thresholds here, I think, are actually fairly okay. Like 20% is the limitation of ownership that anyone cannot have more of in the last 12 months for something to become decentralized. And all of these are a look back at the last 12 months. And the other process here, which, Gary Gensler threw a fit in his letter that he sent to Congress yesterday. But basically, you are able, as the protocol creator, to self-certify. And you file a document with the SEC saying, we declare ourselves decentralized. And essentially, there's a 60-day period currently where the SEC can come in and say, actually, we don't consider you to be decentralized. But, self-certification, hey, we hit all of these benchmarks. Here's proof that we have this. Here's proof that we have that. And this will just become a process that lawyers become, regularly akin to, in the same way that you have with financings for private companies. You have to file what's called a Form D whenever you raise money. And that Form D is basically just declaring to the SEC, hey, I raised money from venture capitalists, or hey, like I sold some shares of my startup to build something. Like that, all of this stuff will just get turned on into the legal machine. But there's a self-certification process. There's benchmarks that you have to hit. 20% threshold. If anybody owns more than 20%, I don't think I would consider that to be sufficient.
Is that a single person or total by investor?
Single entity.
If you own more than 20%, you're not decentralized. What's crazy is that we had conversations with a bunch of senators and congressmen, and I remember this question being asked where they're like, what do you think's fair for one person to own? And I remember just being like, I don't know, 15, 20%, something like that. And now it's in a bill. I'm not saying it came from us, but they really did engage with industry on a lot of this stuff. But the level of prescriptiveness is the only thing that concerns me. And it's all done in good faith to regulate this industry. But there's carve outs, there's exemptions for DeFi, for covered activities. If you're doing X, Y, or Z, there is some registration that you need to get there, but it's mostly, ceremonial and easy to get. And then there's things that cut across, Michael, to your point, what if it's a game? What if it's a loot box in a game? Is that subject to existing regulations? There's a lot of, it's going to be really hard to make something holistic, but this is a really good effort to do so. And
I think maybe to summarize kind of the 2 points that I've seen is that at least things are moving now, right? And you have representative of the the government's willingness to the actual desire to engage with crypto, the community. I think also Gabe Shapiro, LexNode on Twitter, has done a good job of pointing out some of the specific challenges with the market structure bill, and he has pointed out that in its current state, that it would effectively actually allow oversight from both the CFTC and the SEC. The SEC has all this control about what actually decentralization means, and it'd be really easy to imagine a bad outcome where the levels weren't set appropriately, or we were just extremely. It made it very tough for anyone to be decentralized by some.
I understand where Lex is coming from, and I don't disagree. But I would propose maybe an alternative path forward, which is, I think we've been so used to and accustomed to just the vitriol of regulators that want to stamp out the entire industry, that maybe things are actually changing. And what happens if, regulators also want to be able to have, an innovation economy that's based in the US? Like, what if things actually change? Like, what if the perspective changed? Instead of thinking about it in terms of what's the worst path that could happen. And yes, we should make changes to the points that he makes so that you don't have overlapping regulators who are fighting over who gets to say no first. But what if, the tone of these regulators actually changes? Maybe that changes in November. Maybe that changes, sooner than that. But what if things actually are changing positively? And that's, I think, one of the biggest takeaways from this past week.
That's what I would hope as well. And I agree. It feels like that's the thing that's really hopeful about this week, is that it feels like there's been real political change. So I guess we'll just have to see if that's played out. So I got a question for you guys. We talked a little bit on this show before that this cycle or bull market or whatever we want to call it feels a little bit different. And one of the things that is a little bit different is that you don't have as much sort of retail or new participants coming into the market. And I wonder if part of that has been, Michael, you had a good analogy last week about this being like our version of interest rates. We've had high crypto interest rates because the administration has signaled that they're super anti-crypto. They've tried to stamp it out. There's been this sort of invisible foot, pressing down on the chest of crypto, so to speak, in the US. And if that foot has now been lifted, I do wonder if that ends up bringing more retail participants back to markets, but also users into some of these products. And I feel like one of the things that's been missing from this entire cycle is frankly just like retail US participation. And it's throwing everyone for a little bit of a loop. So do you think that this could materially change things? And do you agree with that characterization that it feels like, I don't know, something has been missing thus far? Disagree.
I disagree, just because it's too early in the cycle for that to happen. Like our philosophy is that this could be a longer cycle. And one way to think about cycle timing, like there's obviously the 4-year cycle, but I think the 3-year cycle is probably the better one. And the 3-year cycle is all-time high to all-time high. And, the old all-time high was, I guess, at the end of 2021. And, now we're looking at, probably the end of this year for new, we're still below, 70 or I guess 69, I guess today. But like that convincing all-time high break is when you see retail get reactivated. And even today, I think Coinbase is 273 on the App Store rankings. Like we aren't even close to that turning back on. But like that happens when Bitcoin's at 100K, there's legislation, it's on CNBC. It's like we're a long way from that happening. Maybe not a long way, but maybe 6 months. But like retail comes in, unfortunately, at the most euphoric, frothy time. But like, what have we seen instead? I mean, like Pixels with 1 million monthly active users, games starting to turn on. There's more Ronin wallets and there are bank accounts in the Philippines. Like there's these emerging market signs that those people are contributing meaningfully. And so I think it's just like, you can't say it's a different cycle yet. It's just too early. Like this is exactly where we were at the end of 2020. DeFi summer had happened. Maybe that's like the meme coin summer, the spring that had just happened. It was still insiders. There was no retail participation. Saylor had just been banging the drum about how the S&P 500 companies are going to put Bitcoin on their balance sheet. And then ETH ripped and alts ripped, and retail started coming in, and I think that's where we are. So this seems like pretty much exactly the same path as the last run, without the scams and fraud.
My take on this is, and I can't remember if we talked about this here, but each market cycle you previously had a transition of, you start with Bitcoin, then you move to ETH, then you move to alts, then you move to higher risk reward assets. But what happens at each one of those previous cycles is the wealth effect is what drives the transition from one asset to another. And people buy Bitcoin, then they're like, ooh, what's this ICO thing? And then they're like, oh, let me go buy some ICO tokens. And then in 2020, you had like Bitcoin again, and then it was like, ooh, ETH as the number 2, and then it was DeFi, and maybe NFTs as well. Like there are these like natural transitions, but what happens is you implicitly have to sell your original asset to move from one stage to the next stage. And what we now have officially, assuming today everything gets approved for the ETH ETF, is the market structure once again is going to change, where we have capital inflows into Bitcoin, which creates the wealth effect, which then moves people into sort of the alt layer ones or the other base layers, or the other major assets that you would put in there. And once we have the ETH ETF, then people are going to be able to buy the ETH ETF. And then you move into other assets over time, but you're not selling, or there's not as much net selling at each one of those transition points, because these ETFs, what they will provide, and I still to this day don't think that they have provided it yet, they will provide stable, permanent capital and an always-on buying function for at least Bitcoin and ETH going forward. And we haven't even started with that yet. The wirehouses haven't adopted this yet. I have a friend who trades at Bank of America, which is Bank of America Merrill Lynch. Bank of America, he's a credit derivatives trader, so puts on $100 million notional trades, for his job. But what he has with his 401k is something that's supported by Merrill Lynch. Merrill Lynch doesn't allow people to buy any of the Bitcoin ETFs. And so he and his team on his desk are thinking of transferring their 401ks out of their company to something like Fidelity, where you can actually buy these assets, because IBIT is too risky so far for Merrill Lynch while he's trading credit derivatives. Like there is a lot of market structure that still has to play itself out, and you have to clear a path for a lot of these opportunities to get bought, and these platforms to be able to buy this. And so we're just starting. And I think that that's another big thing about with what Bitcoin will do for ETH. You're going to clear a path. And then it's going to be, you got one asset on one side and another asset on the other. You've got, the common analogy is like gold and oil. Maybe that'll ring true. We'll see, but it will clear a path. And so I think comparing this to where we were in the cycle last time, I think is kind of an unfortunately difficult thing to do, because we had COVID last time. That's what drove people into DeFi summer. It's like people were sitting on their computer all day. And, that's probably one of the reasons why retail isn't back as fast this time. We didn't have ETFs last time. We have them now. There are so many things that are different. I think this one's just going to be longer because of it.
One other way to think about it is that the alt L1s have not even launched yet. Like the big ones. Like we think Barachain is going to be the canonical L1, I guess Monad as well to some extent. But those haven't even launched yet. So, just like Avalanche and Solana and Luna and I guess Phantom, and there is just so many nonsense ones. Those were kind of the 2021, especially late 2021 zeitgeist. Those don't even exist yet. So it's still really early.
You know what else needs to happen is there needs to be these frameworks that are generally accepted about how to think about crypto for this army of ETF sellers to go out and tell people, and that will resonate. You hear this if you ask your average friend who doesn't work in finance or really understand finance, what their approach that they kind of repeat these talking points that financial advisors have at one point told them. It's I'm diversified and I own this sort of 60-40. They just kind of repeat these things that the financial advisors have told them at one point. And we have the beginnings of that with the currency debasement for Bitcoin thing, but there just seem to be these accepted ways of thinking about these things that people can just kind of, put it on autopilot, be like, yep, I want some of this and this. And that just takes time to build, I think.
I mean, I think about it in terms of when I buy assets in different asset classes. Like, I don't know shit about them, really. But, like, I kind of know the headlines. And that's enough for most people. And, like, there was a time in the pandemic, especially early pandemic, when it was like, holy shit, we need to go get guns and we need to go buy gold and we need to go like prepare for like a end of the world bartering society. And then it was like SPACs and tech and Zoom and like ETH, and like ETH became resonant with that tech trend. And I think that's kind of how you're going to see it explained. It's like ETH is the app store and ETH the asset is Apple Pay. Maybe it's not gold versus oil, but maybe it's something more a little tech oriented. But things don't go up in straight lines like crypto. These assets are rare, and RIAs are going to want to allocate to them, is my guess. I think the demand is going to be more robust than people expect.
I also think that you're just going to see people be like, oh, crypto. What does that mean? 50-50 Bitcoin ETH. Like, that's I think how most people are trying to think about it. It's like, Bitcoin's got one part of it, ETH's got another one. Don't worry about it. It's just crypto. Like 1 to 5%.
What's the index?
Crypto. Yeah.
What's the index? How much does it charge? 50 basis? Done. Just like put it in.
I agree. I think that takes a little, but like you have all these like schema that you don't even really know that you have for something like stocks that you just accept as taken for granted, right? Like no one's questioning like what is a stock, and then you have like 60-40 type allocations, but I don't know. It's I'm using an anecdote here. I was talking to my hairdresser about this like earlier this week, and when you
your hairdresser,
my hairdresser. But dude, but that's who we're after. Hair artiste, whatever. Like that's who we're ultimately after. And when you still talk to most people about this, like the reaction that I get from being like, "Oh yeah, I work in crypto," is like seriously, like is that still going on? And that's it. It's like that long-term education. No one's like, "Oh, that's
the guy cutting your hair is shitting on you for your career choice."
Yeah, dude. Yeah. I mean,
furthering of the point that this is going to take so much longer. Like we're just getting started. Like I think both Vance and I subscribe to the same Telegram chat, which is every day. It just like puts the Coinbase app ranking and like details around the Coinbase app ranking in your Telegram feed, and it's like we haven't broken 250 in kind of ever in the last like 2 years. And sometimes it's 300, sometimes it's 275. Like it's always in kind of that same ballpark. And it is an interesting signal. I agree. It's probably not perfect, but it's directional. And we are just so far away. Like I also think we discount the size of the hole that we blew in the world from a reputational standpoint in 2022. And like, that's going to take longer to build back for resale to get back in. Like ultimately it's a good thing that it's going to take longer. Like that is a really, really good thing. Gives us time to build, gives us time to adjust and navigate things like the fit bill and, before it gets too crazy and we blow ourselves up again. But I think that there's going to be a major difference in this cycle versus any other cycle. And it has to do with the market structure and it has to do with the flows and how different it's going to be.
I agree. All right. I got one more thing I'd love your guys' take on. And these guys got a little bit lucky this week, which was Yuga Labs. I don't know if you guys saw this story, but Yuga Labs announced that they were expanding the CryptoPunk franchise that they purchased from Larva Labs a little while ago. So they got a ton of backlash after they announced a new punk-themed collection on Monday, which is Super Punk World. There's a 500-piece collection developed in collaboration with artist Nina Chanel Abney, who's been criticized for diluting the CryptoPunks brand value. And some people were calling them ugly. Most people were, which is whatever.
Welcome to the industry. Yeah.
That's kind of the point. But I think people were just upset that they were touching this canonical, sort of sacred brand. And you guys been accused of this playbook in the past of not having really a business model and just, diluting their collections. and printing more. So
There's been accusations. None of them proven. I mean, I feel like they need to sell the CryptoPunks collection before they literally drive it into the ground.
I agree.
It would be great to see like an ETH community takeover of CryptoPunks. Like that would set them back on their feet. But this, like, they did this with Bored Apes too. It's just like collection after collection after collection. It's like you can't just jam people full of your digital collectibles. There's a limit. So yeah, no thoughts on this other than please stop.
Broadly, to pose another question, what's the prognosis for NFTs going forward?
Not great, man. Not mi familia. Mi familia.
Please.
Oh my god.
Sir.
Yeah. I was definitely.
Yeah,
I was going
turns
into
out
this year.
ones of one. Those are tough to sell.
Tough. Do you think what is the most bullish prognosis that you could have for NFTs at this point? If you had to do a Steelman for a bull case.
The most bullish prognosis is that over time, these are viewed as collectibles and art in the same way that, I was just with a friend recently and he like moonlights as a collector of rare, sports collectibles. And it's like, there's like the RPA. So there's the rookie patch auto, and then it gets defined and you send it to one of the ratings agencies and then it's like a 1 through 10 on like the rating. And like the difference between an 8 and a 10 is, potentially thousands of dollars. Like if you start to build a cottage industry around sort of like there being reasons why you'd want to collect this, like provenance. Oh, this one was owned by this person previously. Like I could see on chain, it was in their wallet. Their ENS address was like the owner of it. And like now, like I own it now. Like on Sotheby's Christie's, you can see like where was this painting from the creation until like ownership and all the different museums that it used to be at. Like that I think is one of the things that defines value. If you're able to have that, define ownership over time and like it's this thing that existed. Like maybe there's a cool thing of, this was minted in 2016, like one of the original assets on Ethereum. And like, you can see that it was minted and you can see the block transaction that it was minted in. Like that would be like owning a painting in, from the 1600s or whatever. Like, I think that there's stuff like that, but honestly, all of these things are just things that take time.
Mm-hmm.
Yeah.
The case is also that the collectibles market is huge. Like there was a big art fair in New York last week, and I think there was something like $1 billion in art sales. And that's obviously the Monets and the Picassos and the, masters of the old world. But I don't think our generation certainly has the same appreciation for those. And I think the younger generation even less so. And so digital collectibles are inevitable to some extent. And the market is very large. And it's a demographic trend. And I think the other one is just they're so beaten down that these are the things that you kind of look for in reversals. But there's a chance that none of these NFTs are the right ones or the ones that end up being long-term valuable. And there's a certain element of like the classics. I think punks will do well just because they're punks and like they will get past this Yuga ownership weird thing. But there's also this element of like people trying to force these like grails on people, like ordinals or runes or like, it's just like dilutive to the overall classics idea. So I think there's just, if you're in the right NFTs, you're going to do extremely well. But if you're in the wrong ones, they're probably zeros.
I agree with that. I think it's definitely punks. Well, just to comment on the Yuga thing, I think Yuga kind of stepped in it. And to be honest, over the years, I've not really agreed with some of the stuff I've heard come out of that camp, which is decentralized Disney and come on, dude.
Dude, decentralized Disney.
That was the dumbest narrative. Of all the dumb narrative we've come up with, that was one of the dumbest. And it never made any sense. And I think, sometimes I hear these
remember when Bob Iger was all in on fucking NFTs? Like,
I was going to say, decentralized Bob Iger comes with it.
Yeah. Oh, God. And things got nuts in 2021. That's a good reminder.
I think you will see things get equally insane, and none of us will be able to realize it. But it'll be differently flavored. But I think decentralized Disney is dead forever. Hopefully.
Jesus. But I do think I still have an emotional connection to the collections that I really love. Like, I miss punk. I don't have any punks, but my bad kids, I have a strong emotional connection to.
I like bad kids.
And there's something there. I think you're right. It's probably just some collections that are going to do well over time. And it's probably the collections that lean into, find a way to build community. I'm much less bullish on jamming an NFT into a game where it doesn't belong. I'm sure there are games that does make sense for, but like, just build connection with me, like create memes about it, just make it cool, basically. Like, the more cool it is to use an NFT as a profile picture is like proportionally bullish to how well the collection is going to do.
So I was literally about to say that, like, what you get with physical collectibles is, the ability to put it up on your wall or show your friends or, whatever. There's like an actual visual element to basically most of them, or some element to it that is artistic. The equivalent here is the digital, we used to call it the digital display case. Like, where are you displaying this to show off or put as your likeness or have it represent you? And I think that in a lot of ways, just given the scale of what you could have as a Twitter profile picture, has a lot more scale. And so the visual elements, I think, of NFTs could actually be as powerful, and in some cases maybe more powerful than the visual elements of art. And I think but that's also something that is going to take time.
Do you think there's, I know we're really speculating. Well, there was also, congratulations to Farcaster. They raised $150 million this week. So I, we even checked in on social fi in a little while, but it sort of feels like to me, you're starting to put together these little pieces out there, which is, digital art provenance type stuff. And then if you maybe combine that with a Web3 native social experience, maybe there's cool stuff that you can do. That's what it sort of feels like in the app space right now, is that we have cheaper block space. There are all these ideas that are kind of floating around, but people haven't really found the correct mix of infrastructure, ecosystem, product that has just really taken off yet. So maybe some combination of like what's going on in Farcaster, NFTs, maybe you can do something cool with frames there. I don't know, but maybe we're just waiting for lightning to strike a little bit in some cases.
I'm bullish on Farcaster. I mean, I think it's good that there is a canonical social media layer that's pushing the envelope of what's possible. And the fact that it's ETH aligned gives like credence to the story of, ETH being this like digital oil, whatever you want to call it, powering these new applications. But these things will take a lot of time. I think Farcaster has like a couple 100,000 monthly actives. We'll see how many of those are real, but like, it's a slog to build one of these things. Doesn't happen overnight.
Yeah, I agree. All right, fellas. I think that just about covers it for this week. Anything else we missed?
That's
a lot of stuff.
Big week.
A lot of stuff, probably. Big week. Well, I think we're getting this decision in a few hours' time, so maybe even bigger than expected.
Do you want to call it yet?
Let's go. Yeah.
Dude, that he was like, my meme coin got an ETF. Fuck.
Yeah.
This is so bullish. It's fake.
And shout out to, I'm actually kind of looking forward to this Nick Carter, David Hoffman fight.
Oh my God. The hype video?
Yeah. Oh, yeah. Maybe we can include that on the way out. But Nick Carter put out he put out a video that's going to hype the people up about this. Also, shout out to Nick Carter. He's looking good. I mean, the man has been training. Yeah.
Shout out to Nick Carter. He's looking good. Okay.
I mean, what? Like, as an
I can connect you with him if you want.
Yeah.
Look, I think
I'm putting the house on David.
Me too.
Second mortgage. Put it on David.
Me too, man. I'm pulling for Hoffman. Me too. I think he's gonna. I mean, he's also it's fighting too. It's all about endurance. Actually, it's really not like how big you are. It's really just an endurance game. It's exhausting.
It is.
A couple minutes.
My days
feels like a couple of years. It's nuts.
Yeah. All right. Well, we'll check back in with the results. I think that's happening this next week in consensus. So we'll see. Yeah.
All right. Later.
All right. Cheers, fellas.
Peace.
Bye.
Hey everyone, want to give a final shout out to this episode's title sponsor, Sei. Now, there are a whole bunch of really exciting reasons to be building on Sei V2 outside of just parallelization. I want you to head over to sei.io to looking into building on their public devnet. Again, click the link at the bottom of this episode and head over to sei.io to start building something today.